Good morning, ladies and gentlemen, and welcome to the Saturday show. Listen, everything is turning bullish for gold and silver now. Everything. Market goes down. The volatility in the markets is incredible right now. Market goes down, it's bullish for gold and silver. If the market goes up on Fed stimulus or Fed cutting rates, it's bullish for gold. We're moving into a gold and silver rally that we're in the beginning stages of it. It's going to be a long, very long, bullish market for gold and silver. And what I'm going to talk about in this episode is the reasons why. We've got a tremendous situation in the world. The entire world, all these other countries, the emerging markets, China, the whole world is going through a slowdown. The United States is the only holdout. The United States economy is perking along. Now, I know you guys, a lot of you hate the central bank, the Federal Reserve. You hate it. But in this coming slowdown, it's our central bank in the Americas here that's going to make our situation so much better than the rest of the world. Quite seriously. We still have room to maneuver. Our central bank still has some room to maneuver because we are basically the richest economy on earth. That being said, the Federal Reserve is what's called data dependent. Now, we just had a FOMC meeting, and we had meetings from the meeting, I think on Wednesday. On Friday, we had a big meeting at Jackson Hole, Federal Reserve meeting. And the Federal Reserve, they're way behind the curve right now. I'm afraid the President of the United States is right. If they want to avert this upcoming recession longer and stay it off, they need to get, instead of behind the curve, they need to get in front of it. This means lowering interest rates. This means more monetary stimulus. But they're being reserved. The Federal Reserve is being reserved on how quickly they react to this upcoming situation. Now, here we are on a Saturday. We just underwent a rather large drop in the market on Friday. I'll tell you what. This is a very serious situation. I was just on, I looked at the pre-market data, and I see the Dow down like 30 points. Doesn't tell me much. Doesn't give me much information. But here's the thing. I'm thinking that Monday morning, depending on how the selling goes, I think that we could have a more significant market drop on Monday than we had on Friday, to add to the Friday drop. And it all depends on that first 2 hours when the market opens on Monday. I'm very nervous about watching what happens on Monday morning to the markets. We saw a very big uptick in the price of gold and silver on Friday. The market stopped, and gold and silver are higher than we've seen in recent history. I mean, for people that are holding gold and silver, I mean, you guys have been waiting for years, suffering through the worst kind of bearish sentiment, bad sentiment. The sentiment toward gold and silver has been like really bad. I mean, they've been saying like going back about a year ago now, or maybe a year and a half ago, people were saying, oh, it might go under $10 for silver, and gold might go under 1,000. And, you know, there was so much uncertainty in the marketplace. People were actually scared to buy, even at those low prices when silver was like $14, you know. They were scared to buy it because they were frightened it was going to go down to 10. Quite seriously. And we talked about the market manipulation of the price in gold and silver, how they'd smash the price down. We went through all of that. Now, you know, silver is such a tight market. The real physical silver supply is such a tight market. The miners out there, they're able to cover basically the industrial supply. But it takes a big chunk of the mining of every year of silver. Silver is one of those things where we go through fresh silver as quick as we get it. You know? Okay, it's kind of like a party where everybody's hungry, and as soon as they bring the turkey out of the oven, you know, they all eat it while it's still hot, and it's gone, then they want another one. That's how we go with silver. We basically, we consume it as fast as it comes out of the mines, practically. You know, and we have a set quantity that comes in every year. So if you go in and buy Silver Eagles or whatever, chances are that silver was just freshly mined out of the ground not long ago. That's what supplies the market. Now, we are able to cover the industrial demand, and we have a little bit left over every year from mining supply that we're able to use to cover bar and coin demand. That is, if bar and coin demand does not explode. Now, remember when I told you about the Fed? The Fed is data dependent. Now, if we don't have a rather sharp market decline on Monday, we're coming in for one soon anyway. Probably in November, after the Brexit fiasco hits, you know. But we could very well have it on Monday, a rather large, that'll push the Fed into action. The Fed, you know, all these words that the Fed's been using for the past 6 months or whatever, words that make the market feel good, the market goes up. Words that make the market feel bad, like what happened this last week, make the market go down. But all of this is just words. It's not actions. The Fed has taken only one action. It was a 25 basis point cut to the federal funds rate. That's a very small cut. By the way, 25 basis points is a very small cut. The Fed is calling for 100, and I mean the president is calling for a 100 basis point cut. He didn't get it. The Fed came in and they said, hey, you know what? We did a 25 basis point cut, and that's all you guys are going to get. Basically, that's what they told us this week. And that's why we got the market decline. The market can push the Fed into action. And believe me, the Fed will take action if the market declines rather steeply, because they're data dependent. All of this is very bullish for gold and silver. But there's a problem with silver. Silver is the weak spot in the world's entire financial system. And the reason why is because we consume it. Remember, I said, like the hot turkey coming out of the oven, they all gobble it up, and then it's gone. And they want another one. That's what silver's like. Gold is like the old lady who makes 50 cakes, you know, and she lets them cool the night before, you know, and she has them all stored away in a big fridge, you know, at the fair, you know, and she brings out one cake and feeds it to them. They want more? Sure, she's got all kinds of them and stored away. That's what gold's like. Not like silver. It's not consumed immediately. Gold is saved, melted down into big bars, and stored away in vaults. Got tremendous supply of it. Gold is built up over the years. And they don't really use it for a whole lot other than jewelry, a little bit of electronics and stuff, but it's not an industrial metal that's consumed like silver. Silver is a weak spot. And this gold to silver ratio we got right now, oh my gosh. What a value on silver. Even now, with silver prices where they are right now, it's still an absolute unbelievable bargain when you consider how the dollar is depreciated over the years to what the dollar's worth right now. You know, all the way through history, a man's day's work was worth 1/10 of an ounce of silver. Back in the Roman times, they had a denarii. I think it was a silver denarii. It's a little coin, a little silver coin, about the size of a dime. You know, it wasn't 999 silver either, but it was like 1/10 of an ounce of like 80 or 90%. You know, kind of like the dimes we had before 1964. That was not an 8-hour day of work. In history, people didn't work 8 hours like they do now with a coffee break and everything else. No, a day's work was 12 hours of hard manual labor. And all the way through history, that's what 1/10 of an ounce of silver is worth. Right now, even at these prices of silver right now, a normal guy that just works a minimum wage job right now could make 4 whole ounces of silver in a day. 4 whole ounces. That's 40 times. It'd take 40 days of work through history of 12-hour days, not 8-hour days, to make that amount of silver. Silver is a weak man in the financial system, because if for some reason sentiment in gold and silver goes really hot and people decide, hey, you know what, the financial system is very weak and trembly worldwide, and we see gold and silver going up in price, and we see the dollar losing and depreciating in value, and all of these other markets, places where they've been stuffing money away, like in the Treasury, buying Italian debt, you know, buying junk bonds, triple B rated, whatever, and investing, you know, all of this money they've been stuffing away. Can you imagine if a little chunk of that comes into the silver market? Just a couple $1 billion comes in, and we're talking the whole world here, comes into the silver market and wants to chase after not paper short contracts, but after real physical silver. They will break this market. And once the silver market is broken, it breaks the gold market. Even though the gold market's a much, much, much larger market, if silver shoots to the moon, don't you think gold's going to follow? Yes, it will. They always follow each other. If gold shoots to the moon, silver will follow. They go together. This is why it's called gold and silver, silver and gold. So, right now we're moving into a time that you gold and silver guys have been waiting for years, where everything is going to be bullish for gold and silver. So if we get a big market decline, that's going to be bullish for gold and silver. And on the alternative of that is if we get the Fed stepping in, say we get a big market decline, then the Fed steps in with either quantitative easing, or maybe they won't even call it quantitative easing. Maybe they'll have some new name for it that they figure out, you know. But they step in to restore market faith and market confidence, and they start lowering interest rates again, because never forget, they're data dependent, and if the data comes in bad, they're going to change their policy as quick as the wind can change its direction. It's all bullish for gold and silver. Now, what about cryptocurrencies? Cryptocurrencies, you know, they're starting to follow the market trends. And we're heading into a global recession, but here's the thing what I want to say about this global recession. The country that's going to make out the best in the global recession, according to my opinion, is going to be the Americas here. But there is a major problem that I'm watching very carefully, and I'm studying it right now. I've been studying it for the last 24 hours, but I got more to learn about it. There's 2 sets of banking systems that could be getting into major problems, and they're both intrinsically connected to the American banking system. One is the Canadian banks. And it's kind of simple to explain why the Canadian banks are going to be getting into problems. Is there's a tremendous real estate market here in Canada. Toronto, Vancouver, Victoria, British Columbia, and everything. The price of houses just went astronomically high, unbelievably high. It's like something that's never been seen before. It's the biggest price bubble, bubbles of bubbles. You know, a house, if you went into a state like, say, someplace in Texas or someplace in down in some of these other states, you know, like West Virginia or someplace like that, you could buy probably a house. It's fair decent, a little house, you know. It's, you know, for like 30 or 40,000 or something, you know. You could buy a place to live. You go up here to Canada, in around Toronto or someplace like that, and for the same home, you're going to pay like $2.5 million. It's unreasonable. It's a bubble. Now, what they've done, the banks up here in Canada, there's different banks up here in Canada. I'm not going to bother naming them, but they're big banks. Big banks. And they're connected to the banks in the United States. You know, they're interlaced. These banks have interlaced themselves through derivatives products and through interbank lending. So they're all connected. So they're connected to the banks in the United States. What they've done, though, is all these people, now there's thousands of homes, you know, that are all priced high like that. And these houses used to be priced like, going back a number of years, you know, they used to be priced at like 20, 30,000. All of a sudden they went up to 2.5 million. In no time. Zoom, the real estate price went up. Well, the banks come in to the people that own these houses, and all of a sudden these people are rich. They got the equity in their home now is worth 2.5 million. So the banks come in, you know, during the good years. These are the last 5 or 10 years. The banks have come in and said, hey, you know what? We're going to extend you guys a line of credit based on the value of your home. And the banks capitalized on this because when they loan this money to these people, this is money creation. They create the money from nothing. And so these banks have had record profits, unbelievable profits for Canadian banks for a number of years. And these record profits have come from loaning all this money out on home equity loans. And, you know, it's an enormous Ponzi scheme because when the world economy turns downward, and we all know it's going to in the next little while, the house prices here in Canada are going to cascade down a cliff. And these people are going to be left with these big lines of credit that they've borrowed tremendous amounts of money, putting in new swimming pools, buying luxury cars, taking big trips and everything else. The price of their home's going to get cut in half. And now all of a sudden, the whole deal just turns sour between them and the bank. Basically, these turn into non-performing loans. So these banks up here in Canada are going to be getting into trouble very, very soon. Now, situation is happening with the Japan banks as well. And this is where I'm studying right now. I'm going to learn more about the situation with the Japan banks. But the banks in Japan are coming into a situation where they cannot keep their heads above water. Basically, I'm getting down to the basic nitty-gritty of it. I'm going to stay into the details of exactly why, but it has to do with the Japan's lost decade and what Japan's been doing with their interest rates and their monetary policies over the last few years. And this is why the Japanese banks are going to be starting to get into trouble too. But all these banks are interconnected with each other. They've extended loans to each other. They have derivatives products that they share back and forth. You know? So I'm keeping my eye on this situation. But the American economy, like I say, is probably going to make out the best. We have a lot of protectionism in the world now. So if a situation occurs like we had back in 2008, now it's going to be more difficult for countries to bail other countries out and stuff like that. And basically, the Europe, and I've been saying this for quite some time now, is going to be the epicenter or the center of this crisis is going to be in Europe. But it's going to extend out into China too. The Chinese economy is right now, it's not going reported yet. Numbers are not coming in or anything, but just visualize it in your mind. How this trade policies and these trade wars and now extending into currencies is going to play out on the Chinese economy. And if you can't see this in your mind, I'll kind of try to lay it out for you. Is the Chinese economy right now is just going down like a stone falling through the water. It's just going down, sinking. It's sinking really fast. That's how the Chinese economy is going right now. But the data is not really hit the fan yet. The data from the Chinese economy. Then we have the United Kingdom with their Brexit is sinking the United Kingdom's economy, but they have the hope of new trade deals with the United States once they get this done, which will improve and can improve both economies, both the United States and the United Kingdom, basically creating a new trade bloc between the two. And this is good. This is really good, you know. Boris Johnson, he knows this is really good, and that's what he's aiming for. Now, by the way, my new favorite world leader, Boris Johnson. I just see him as a man of the earth, you know, a real born leader or whatever, you know. He had a meeting with the French Prime Minister. You know, French Prime Minister is possibly my least favorite of the world leaders. Anyway, I saw a picture, you know, Boris Johnson sitting there with his feet up on the table. And the leader of France sitting there looking very uncomfortable. And, you know, it kind of tickled my funny bone, guys. Anyway, well, we're heading into trouble. And we're heading there fast. Monday. Watch Monday. Depends on which way it goes early in the day. Monday could be a very black day for the stock market. And, you know, this will only force the Federal Reserve into action. And, you know, I mean, you guys might be really upset with the Federal Reserve and everything. But ultimately, they're the only thing standing between us right now and doom. They can be the heroes of the day, you know, just like they were back in 2008. They can do all that all over again, and it's all data dependent. And as the data comes in bad, they're going to improve our economy. But what are they going to do about all these other economies around the world that are sinking right now? What about that? You know? And this is why I say, we're probably going to make out better. Because first off, we're going into this thing with I'm not going to say it's a super economy and everything's grand. No, but it's better than all the others. It's the best one. And we're going into this thing with the best economy. And we got the Federal Reserve to just pump the money out there like crazy. But, you know, what's that going to do to gold and silver, guys? If they start pumping money like crazy, we're already seeing the initial effects of it, of the Federal Reserve just talking dovish and dropping the interest rate 1/4%, and we already see the effects of it. I mean, gold and silver's already starting to take off. It's already on the launch pad. You know, this is a time to get excited for you guys who have been holding gold and silver. Now, but what about cryptocurrencies? I'm going to get back to that. I'm going to talk about that for just a minute or two. The initial stages of this recession that the world is going into, I'm not going to say the United States is going into it. The United States is holding back out of it a little bit longer than the rest of the world. But this recession, this worldwide recession, is very bearish for cryptocurrencies in the initial stages of it. But later, in the later stages of it, when it starts, this recession, this worldwide recession or depression starts to mature, it's going to turn and change, and it's going to be bullish for cryptocurrencies. This is the trend that's going to happen. So, what this is going to set up is in the future, I think in the very near-term future, it's going to set up a buying opportunity for cryptocurrencies. And for you guys out there that are HODLers, in the long term, it's going to pay off big. This is what I think is going to happen. That's my personal opinion on it. So listen, this show's getting rather long. Watch Monday. Watch the early part of Monday, what happens. If it starts to fall off a cliff, the Dow, we might have a very black day on Monday. But, you know, if investors come in and they see an opportunity with this little drop we just had to buy the dip or whatever, you know, like they've been used to doing. I mean, they've been trained for years now to buy the dip. It might level out. I really don't see a big up day, though. Even if they do decide to buy in early and the market starts to recover, I don't see a big up day for the market. But if it turns the other way, I could see a really big down day for the market. Listen, thank you guys for listening to this report. And we'll catch you guys. I might do a show Sunday. Thank you guys, and give me a thumbs up, and we'll catch you guys in the next show. Bye-bye.